Hi, Mario. How are you?
Good, good. Thanks for having me on.
Yeah.
I'm excited to share some really neat products our bank has.
Yeah, that would be great. Before we get started, tell me a little bit about yourself for those who
Well,
haven't had the pleasure of meeting you.
okay. So for those that haven't met me yet, my name is Mario Orlando, and I'm actually a vice president of Meridian Bank and branch manager for the Timonium branch. I've been a 28-year veteran in the field of mortgage financing, and quite frankly, I do a lot of first-time homebuyer programs. I consider myself a first-time homebuyer specialist. And I do all the programs, including federal, state, municipality grants, deferred loans. I love doing that because I love being ingrained into the community to help, first-time home buyers. Because all of us, most of us, of course, have been, first-time home buyer at one point in time, right? So it's
Yes,
neat to
we've
try
all
to
been
help other
there.
people out. So yep, that's me.
Definitely. Yes. Thank you so much. All right, so we'll just get right to it. So we have a little bit of Q&A on this new 100% financing program. So we definitely want to get some more details. So what does 100% financing mean?
Okay, well, that's a very good question because that comes up quite often. You would think that it wouldn't have any be misconstrued because it says 100% financing. But the 100% CRA program we've introduced these last couple of weeks ago, and by the way, CRA, if you're not familiar with it, stands for Community Reinvestment Act.
Mhm.
Now, if you don't know, a lot of banks have to really give back to the community. So a lot of their profit that comes in has to be put back into the community into the area that they're centered in. So our bank came up with a great idea to have a 100% CRA program. Now that 100% means that it finances 100% of the sales price. Now in all residential mortgage transactions, there's going to be closing costs, right?
Right.
So you have transfer tax, lender fees, title fees, so on and so forth. That is not included in that. So the 100% really means that we're financing 100% of the sales price. So if you have a $250,000 sales price,
Right.
$250,000 is going to be your loan amount.
Right.
Yeah.
So no down payment.
No down payment.
Okay.
Exactly. Yeah.
All right, great. All right. So my second question is, what are some of the details of the program? How do you qualify?
Okay. So I can post a link for you for your clients or anyone that's listening to this to a loan application. In that loan application, you'll complete all the necessary, pertinent information. But the qualifiers, to answer your question with me, you would have to have a 700 credit score. You have to have a debt income ratio of no more than 45%. We can go into detail on that if you like. You have to have a minimum of $1,000 into the transaction. And typically that's probably going to be your earnest money deposit anyway.
Right.
And the loan amounts can go up as high as whatever the county max limit is for the conforming loan limit. And you're allowed to get up to 4% seller help.
That's awesome. Do you have to be a first-time home buyer?
Yes, you do.
Okay.
Yep.
First-time home buyers only. Okay. Good to know. And I know that you have some other great programs for people that aren't first-time home buyers. So that could be one of
Yes.
our next videos for sure.
One more thing, Beth.
Yeah.
It has to be for low to moderate income purchasers. So
Okay.
what does that mean? That you have to be below the 80% of median income levels for the specific area that you're buying in.
Gotcha.
And it has to be in a low to moderate income census tract.
Okay.
Now, for those that aren't sure whether this house qualifies or not, I have a census tract finder that I can key the property address in and make sure it meets that, the CRA requirement.
Very good. Okay, great. So another thing that I was curious about, does mortgage insurance apply to this program?
Wow, that's a really cool question here, because you know why? The answer is no.
Oh, wow. Okay, great.
Yeah,
That could be
yeah.
like
So there's no
hundreds of
MI with this program, which is really
Wow.
interesting because let's think about this. A conforming loan, if you're not putting 20% down, typically, federal law provides that you have to have at least, some mortgage coverage depending on how much you put down. So there's a cost to that. And depending on what your credit score is, if your credit score is a little bit lower, then it could be pretty costly.
Right. Yep.
And even with FHA, right? So
Yep.
FHA requires an upfront mortgage insurance premium of 1.75, which you're financing in, which raises your loan amount. Plus you have a monthly mortgage insurance premium that's over the life of the loan.
Right.
So in some cases, on a $250,000 house, that could be several $100s, right?
Yeah.
So
A
the
month.
savings,
Right.
yeah, the savings, and it's not only you're getting 100% financing, but there's no MI, which is also going to save you a considerable amount of money. So
Right.
that's all. Yeah. No
Yeah, and I
MI.
think it's really good too, because it kind of helps if you like affordability factors, especially
Yeah,
considering the interest rates have increased.
sure.
It helps people bump that sales price up a little bit more to
Yeah, it
help them
really does.
purchase
I
a
mean, if
better
you
home.
a
Yeah,
lot of times I'm trying to figure out what the maximum affordability is for a client, and we're right at 45%, and then you got to add MI to it, and all of a sudden
right.
puts you above the 45% PTI. Yeah,
That is great. I'm so
yeah,
glad that that doesn't have mortgage insurance. That's huge.
it is.
So my last question is, can you combine additional grants to help with closing costs?
Yes.
Oh,
Now,
that's wonderful.
yeah, there is a caveat to that though, is the maximum combined loan to value can only go up to 105%. So we're
Okay.
already at 100% for the loan, right? So any of those grants typically are considered a second lien until they're forgiven after 5 years or whatever. When you combine the loan amount plus the grants and divide it by the sales price, you cannot exceed 105% of the sales price. So
Okay,
that's
so
important.
ideally, if closing costs are over 5%, then the buyer has to take care of that out of pocket, right?
Well, not necessarily. I think really
Under
where it comes
5%?
into play is whether it's a grant behind it, or a deferred loans. Those types of liens against the property are going to be added into the loan to value. So let's say, for example, simple loan purposes, so we can, break this down a little bit. Say
Mhm.
we have $100,000 sales price,
Right.
and you have a $5,000 grant behind it that's forgivable after 5 years. You're now at 105% loan to value. So you're really kind of squeaking in and getting that grant or deferred loan in. You're maxing out at 105%. Typically, you're not really meeting that 105%. But in this case, since we're already at 100% sales price and loan, you're already kind of climbing up that ladder already, right? A
Right.
lot of times, if you're using like an FHA loan, you have 3.5% down, or conventional 3 to 5% down. You got a little bit of leeway there, but in this case, you're already at 100%, and then you're adding a second lien grant or deferred loan behind it. It's going to put you to 105 pretty quickly.
Yeah, yeah,
Yeah,
great. Well, I think that this is really great. I think that, like I said, considering the climate of the market and the interest rates going up, I think that this is really going to help first-time home buyers purchase a home that is livable, that they can get into and get into pretty easily and
yeah,
save that
yeah,
money, right?
yeah, exactly. Now I know we've
Yeah.
been in a seller's market for quite some time, and
Yes.
we're starting to see the market soften a little bit because of rates. We're starting to see a shift, not so much that, hey, we're giving up all this money for seller help,
Right.
but since I'm starting to see a little bit more of that in the market, hey, we got 100% product here, and if we get 3-4% out of the seller, because this program allows you up to 4% seller help, now all of a sudden you got the 100% financing, you got 3 or 4% towards your closing costs. You're getting into this property for very little money.
Right. Yep. And then
Yeah,
we also take into consideration there's $1,000 minimum out of pocket with your program, but then depending on what grant program you couple that with, a lot of the grant programs have certain
yep,
requirements on minimum out of pocket too. So
yep,
it all has to be taken into consideration. But this financing program is awesome, and I really appreciate you coming on here and telling us a little
absolutely.
bit about it. Could you give us your information? Tell us how to reach you in case someone wants some more personalized
Sure.
information
Yep.
about this program and if
Um,
you qualify.
yeah, once this is posted, I'll go ahead and put my name, address, phone number, and cell phone number so you can contact me. But just so you guys know, if you're looking to reach out and you have more questions about this program or you're interested in it, please call me. My cell phone number is 443-807-3585. That's
Awesome.
443-807-3585.
Awesome. Well, thank you so much, Mario. Thank you for always keeping
Absolutely.
us, in the loop and what's going
Yep.
on in the market and these awesome programs.
Beth, I love working with you.
Thanks.
Quintessential professional, and congratulations on your marriage. And
Oh, thank you.
Fred's a great
You're up
guy.
next.
Yeah, yep. September 24th.
There you go. All right, Mario, thank you so much. Have a great day.
Absolutely. Thanks for inviting me.
You got it.
All right. Bye-bye.